The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, looking at Wednesday's market action, finishing out the trade, bump it up against some key resistance levels. March corn finishing just below the 450 mark. January beans finishing off the highs, about a nickel off the $10 level. A little bit of green in the wheat trade as well on the day. Let's talk about some of this overhead resistance and what we're seeing in the market right now. Joining us for a conversation, Craig Turner with StoneX. Craig, good to have you back with us here on Market Talk. Hope you're doing well.
Yeah, I'm doing great. I'm happy to be back, and yeah, things have picked up a little bit since the WASDE report. So
Yeah,
exciting to be here. Yeah,
a little bit of an interesting report, particularly for the corn balance sheets, I think. And, we look at this market, you'd think with some of the numbers we got for corn, we would have screamed higher, but it's kind of been this slow trickle and bump it up against overhead resistance here at 450 in March futures. And that seems to be maybe driving some conversations. I don't know how much farmer selling it's leading to, but it's at least driving the conversation, it feels like, Craig.
yeah, absolutely. So yeah, the December WASDE is usually pretty quiet. The USDA tends to just make some small tweaks, and they save the big stuff for January. But here's the deal: we had ending stocks come down 200 million bushels. 50 of that was from ethanol. 150 of that was for the exports, and a 1.738 carry out of that's around 11% stocks usage. Things are getting a little tight. You take a look at the major exporters. It's the United States really seems to be the only one projected to have leftover corn for export here. So that's interesting. Now I understand, some were thinking, hey, why didn't we rally more? Especially if we only have about 200 to 300 million bushels of cushion here, like heading into, and we still got a long ways to go. And I get that, but there's a couple of things going on too. Like, one, soybeans does have a way of holding things back, right? You can make the case soybeans should maybe deserve to be a little bit lower, but wheat and corn are kind of holding it, holding it on the ropes a little bit. And I think also too with corn, we could, in a vacuum, if there's no other market, impacts, like maybe corn would be 470 or 480 right now, but it can't get out of this 450 for March and let's say 460 for July, just because soybeans, are going to be this kind of high 9, low 10 market too. So I think that's interesting. Also, it's a show me market. Like, we need to see demand come in, and if demand keeps on coming in, and you think we'll be getting close to 1.5, that would be, interesting. But and then there's also this whole thing about, will exports continue past January 20th? What's going to go on with the United States and Mexico and, Trump 2.0, right? So it's hard to throw money into it. We really are. And, in the charts there, 450 is a big range. I mean, it's a big resistance level. And then, finally, on the whole corn question, you always got to take a look into next year, right? Because, stocks, when you look at old crop stocks, you got to realize that stocks levels are continuous, right? So old crop ending stocks or new crop beginning stocks, and the market's going to reflect that. Now the WASDE may not publish those numbers, but I'll tell you right now, the funds and the money flow have their own models, and they look to next year and they think to themselves, man, if we're at 92 million acres and a 183 yield, we're not going to have a corn problem next year either. So do we really need to price ration exports now if we don't think we're going to have a corn problem next year? And I think that's really what's going on there.
Yeah, very true. Very true. How about the wheat trade? There was a couple of updates there on the WASDE. The wheat reaction has been, I'd say, relatively muted as well, along with everything else. But what are you watching on the wheat side of the markets, Craig?
All right. So the number one thing we look for on wheat is will demand and when will it come back to the United States? Because the way it works right now in the global export market, we're projected to be at the end of the marketing year the second tightest we've seen since 2007. It's only December, right? So we got plenty of time between now and May to work through the available stocks. The thing is, Russia, the United, if the economy, or I'm sorry, if the market is, just based on supply and demand, the exporters will offer the grain as it's available. If they have too much, they'll lower the price. If they don't have enough, they increase it. But in Russia, The game is to get as much out as possible before the government puts some, marketing quotas on you for exports. So they're going to just keep on offering 220, 230 per ton until basically they can't no longer. They'll get as much out as they possibly can, and then the government will come in and say, hey, we're getting too tight. Flour prices are too high, wheat price too high. And if you take a look at the Russian stocks, they're projected to be a 10% stock to usage, which is about as tight as they get. So what happens when they get as much wheat as they possibly can before these export quotas happen? Will there be demand from, let's say, February to May before the Northern Hemisphere can start harvesting winter wheat? And when you take a look at Canada and Australia, Argentina, the European Union, they're not going to have a surplus of wheat to export. The only one that has it is the United States. So you have this push and pull of the market. Like right now, there's no shortage of wheat, and it's available for Russia, 220, 230 a ton. But come January and definitely February, when it's not available anymore, and everyone has to now go looking for wheat in the other four corners of the world, you could have this situation where it's the United States. And if it's the United States and the wheat demand's coming here, the funds go from short to long, right? But it's a show me market. You've got to see that demand. It's not you can make an argument we might have weather issues. You can make an argument that Russia's going to have 1.5 million acres less planted for their new crop. Some of the initial ratings you've seen of them rating it like, 30 to 35% poor have been reported. That's tough, winter wheat ratings this early in the game. You kind of got to take with a grain of salt. So there's a potential for issues with Russia with the new crop. But what the wheat market really is now, if we're going to take off to the upside, you have to see Russia stop selling, get exhausted, those quotas come into effect, and where's that demand going? Because if it comes to the United States, that would be a big deal. If it gets spread out between Canada, Australia, Argentina, I don't think the market's going to care too much.
So let's talk risk management here. When we look at this grain complex, we're getting into the Christmas time frame. It's typically quiet. It can be a little more volatile on low volume. And we look at some of these price levels, and I just wonder how many farmers are going to try to hold out here and hope this market holds at some of these, nice round numbers that we like in corn and beans, et cetera, until the first of the year to try and make some sales. I mean, talk about that aspect and just your general risk management thoughts here over the next couple of weeks, Craig.
Yeah, if for a lot of guys are any sales they've made, they've already done, and they'll wait for a lot of them will wait for the new tax year, to start. But there's also risk though of everything that you have in the bin, right? So we've just gotten to 450 in March, 460 in July. Those are very strong natural resistance points. And without the cash market moving prices higher and the funds already long as they are, it's hard to see to go up to that next level. So, the options are cheap right now. If someone was real concerned about prices falling between now and January 10th, which is the next big WASDE report, and the January report is a big one, you can see that. For guys that have, you can see looking at 430s and 440s, I'm more concerned about soybeans going to $9 than I am of corn going to $4, right? Because in the corn market, it doesn't look like we're going to get burdensome stock levels this year. We'll be adequate, just playing the odds with potential to get tight. It doesn't look like we're going to be extremely burdensome. Soybeans, you put 165, 170 million metric tons coming out of Brazil, and the numbers look tough, right? So I can see, we were talking to guys about, hey, do you want to look into puts, around, where we are now to kind of protect yourself around that $10 level. Some guys who are more comfortable with risk, that have grain in the bin, will use a covered call strategy. If there's options that expire in 2 to 3 months and they know they're going to sell this grain, it's just like a covered call strategy in the stock market, and they're selling the premium on that corn or the soybeans, knowing that they actually have the physical, and either they're going to collect the premium or they're going to make a sale at a higher price. So we've seen some of that. And I think that kind of makes I think those strategies where people are comfortable with it makes a whole lot of sense between now and the WASDE, especially if it's grain in the bin. It's a little early for new crop corn sales. I think that it's a little disappointing to see December 25 at 440 and the market trading in an inverse here, with March and July over over December. We actually saw that come in a little bit today, but I would have thought, with a 2 billion or 1.9 billion carryout, D's 25 would have been higher than March or July. So there is some demand there. I guess that's what the market's telling us. But just in terms of risk management, we're going to be waiting for. I think we have a better chance of getting a nice corn rally to hedge some December corn going forward. If my concern would be just between now and January, if something happens between Trump and Mexico to affect the corn market and stuff like that, there are cheap puts out there, and you can even collar it if you wanted to, for combining 430 puts with 460 or 470 calls. Again, these are all marginal positions, and you need to talk to a broker about risk and if it's suitable for you. But these are the types of things you would look for between now and, let's say, the January WASDE report.
Well, of course, that risk of trading futures and options can be substantial. Always want to remember that. Craig, folks want to reach out to you and talk to you about their marketing and more there at StoneX. How can they get in touch with you?
Yeah, absolutely. You can go to my website. It's grainsandoilseeds.com. You can follow me on Twitter, at corn, wheat, soy, or you can give me a call at the office, 312-706-7610.
Craig Turner with StoneX. Always appreciate the time. Thanks for joining us on the show today. Have a good one. We'll talk to you soon.
All right. Thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.